Chase by Dallas, make it hurt.
Hey guys, good Wednesday, I would say. It's me, Dominic Green, managing partner of Tenant Commercial Real Estate Services. It is Let's Talk Commercial Real Estate Investing Education Wednesdays. So on Wednesdays we talk about stuff that I'm seeing, stuff that I think is important when it comes to learning, understanding, and looking to invest in commercial real estate based on my knowledge, stuff that I read, stuff that I've heard, calls that I'm on, conferences I go to, providing that information here as a resource, as I said, work to collaborate and share information, share knowledge and research, so that we can all, with the ultimate goal, at least for me, we're here to invest in commercial real estate, invest in income producing commercial real estate primarily. I know there are those that are interested in doing development. That's a whole different dynamic, but nonetheless, it's still with the goal that to create something that is stabilized, that's producing income, right? So that is, and also I'm driving too. So that is the purpose of Education Wednesdays. Purpose of the channel, bring resources together for us that look like, to help people that look like us, and those that are not, but primarily that's our objective, because for far too long information doesn't necessarily get to us, or in some cases it's hard to find, and if you're not in the industry, you won't know most of the stuff, right? In some cases, but a lot of stuff is online. If you look for it, you do due diligence, you'll see it. Then there's just nuances that just come from experience and doing transactions and stuff like that. So nonetheless, wanted to just comment on today. I know I've been talking about affordable housing, office and stuff like that, but I did want to talk a little bit about net lease transactions, right? And what exactly they are. Why would someone want to invest in them? What do they look like? And I'll try to show examples as well. So in a nutshell, single tenant net lease. Net lease in general just means that the tenant pays a base rent plus triple nets, which is usually your common area maintenance as a cost, insurance of the building, their portion of it, and then taxes, real estate taxes, which we all know, especially I would say here in Dallas, DFW, or just probably in Texas in general. Real estate taxes are on the rise, right? Everybody's protesting. And plus there's a lot of transactions happening too, so that's probably not helping either the case, even though we're a non-disclosure state. So nonetheless, that's essentially what net lease is. Now, single tenant net lease deals that are on the market that are actually for sales and investments, for people who typically, from my experience, and working with clients and our partner working with clients in our brokerage, is these are individuals that want to get something that's a lot more passive, less management intensive, so not necessarily has being a property manager per se, maybe asset manager for the most part, but depending on the lease structure, especially with the ABS, absolute net lease, triple net lease, where really the tenant is in control of the entire property per se, as far as paying all the expenses, and at the end of the day they just send you a check, right? So they're paying tax and stuff directly. There's no obligation regarding any costs per se for operating that particular building towards the landlord. It's literally the tenant leases the space, it pays all the expenses, and also sends you a check, right? So, like I said, it's mostly for people that are looking to get out of the more management intensive type properties, assets, office, multifamily. Industrial, not so much, depending on what you got. If you got a multi-tenant, it could be. But you also do have single tenant net lease deals in all those different sectors. Well, except for multifamily. But in office, and obviously in retail, and in industrial, right? It could be one tenant, it could be Amazon to be the primary tenant on a absolute triple net lease. Or, it just be on triple net lease, and there may be some costs in there that you have to account for, but at the end of the day, you're charging the tenant for majority all the costs, with trying to get 100% recovery. But there's always some negotiation with the tenant, especially depending on who has the leverage, right? So it's a bigger tenant like Amazon, their lease is probably going to be something where it's going to have some friendly terms in there for them. So you may be on the hook for some costs or something like that, some cap on expenses, who knows? Let's just say the devil's in the details. But nonetheless, what was popular then and still kind of somewhat popular now, just based on the price point, where all the dollar stores. So you have your Dollar Generals, your Dollar Trees, your Family Dollars. One, because of the price point. They're around anywhere from $1 million to $5 million roughly, depending on where they're located at. Then in addition, that especially your Dollar Generals, they were on a tear as far as expansion, right? So they're building new stores everywhere, just based on their business model. One of my favorites is O'Reilly's and AutoZone's, because even though I know we're transitioning to electric cars, there's still millions of cars that aren't electric cars, and I think it's going to take some time for all that to phase out, and then whatever type of repairs you can do or want to do to those cars, I believe there's still going to be a need for their services, right, for repairs, right? And it's mostly people who are prone to want to fix their own car, and given their type of given the income situation, they're not necessarily going to just go out there and buy a new car, so they're going to look to repair it. Plus, the shops and stuff they have accounts with and stuff like that. The Vitas deals with dialysis, kidney. It is with kidneys. That's one of I want to say number 3 causes of death. But those patients that have to go get dialysis, man, they have to go get it at least 3 times to 4 times a week. And the Vita and Frenesis are the 2 top dogs in the space. Publicly traded credit tenants. You just got to understand their business model and then the design and stuff like that. So, not to go off too far into it, but the primary structure is, like I said, essentially, for people that are looking for income, mailbox money, as most people call it, though they gravitate to that. And, single tenant, at least especially, when people see like maybe a McDonald's, people don't realize, might not realize that sometimes those stores are owned by individuals that look like us. So it's not necessarily McDonald's that owns that, but it could be a good majority of the time they do. But if it's not them, your Chick-fil-A's, your Wendy's, and typically if it's a QSR, they're always going to be on prime and prime, right? And what I mean by prime and prime, I mean they're going to have prime real estate. So maybe So that's a Wendy's there. In the background, you can actually see Walgreens. Walgreens is another one of those. I think they're building something for Chipotle right there. I'm not too sure. But the way the structure is definitely fast food. So you also have your pharmacies, right? You have your tire shops. Anything that, any type of business that can be either that wants its own space and its own out parcel, could be potential for a single tenant at least structure as an investment, or as already is, and just something you can purchase. But people have different ways of looking at it. If you look at some of the type of investors, they look at the credit of the tenant, which is important because it is the scenario where it's one tenant, but the tenant is not necessarily individual. It's a business, and as long as their business is satisfying the local community, and they're making good money, they've been there for a while, and they continue to be there for a while, then you pretty much have a safe bet that they're going to continue to pay their rent because their customer base is there. So unless their customer base changes, demographic changes, then maybe they're considered to leave. And then depending on the type of tenant, the amount of money that they spend in TI will kind of persuade them not to leave early. And then, especially if you're dealing with a pharmacy like Walgreens and CVS's, and they're mostly in their newer stuff, or maybe even some of their old stuff that I saw before, they have what's called a rent holiday. So basically, this is basically them getting an abatement, but it's at the end of the term, and those things can be for a couple of years, so that's got to be factored in too. So these type of investments will vary in price point, and then it also varies on where you are at, since we are global, I guess we would say, because we're on YouTube, but in the United States, everywhere. So, it's just a wide variety of what could be. And then, for some that are on the more other side of the risk spectrum, where it's something that's not already tenanted, there's opportunity where you can see, well, maybe there is, I've seen it done. There's an old bank, because banks have been downsizing a lot, especially Chase. They've been getting rid of a lot of their locations, downsizing, getting ones that, are not necessarily having a huge volume of deposits, getting a little bit more mobile, getting a little bit more drive-throughs. So they've been shutting down locations, Bank of America too, Wells Fargo as well. So a lot of times those banks are on prime and prime, some of the best real estate. There are corners where obviously there is a lot of population there, and still is. They're easily visibly seen from the street. Usually vehicles per day on the roads are 25,000 plus. And then they have usually about an acre of land. And then obviously they're improving the building there. So I've seen instances where a Chase was not necessarily converted into a Raising Cane, but what they did is they just bulldozed it down and built a Raising Cane on it, and then was on a triple net lease, a single tenant. It became a single tenant net lease investment, because a lot of your QSRs are always looking for the best locations, and so if you can happen to find, as you're driving around daily, you'll start to notice, if you're somebody you really focus on, you'll see these out parcel structures, buildings that were vacant, or maybe could have been another QSR, like your Taco Cabana, that had trouble and they shut down a lot of their locations, and a lot of them been re-tenanted as Chipotle's or something else. There's Hot Chicken, I think is Dave's Hot Chicken, I think is what's I've been seeing popping up here lately. And then I know Hooters with their new concept as well. So nonetheless, like I said, for those on the other spectrum, it'd be something that you buy. Obviously, it's dark, so it's vacant, but it still has a value to it. But it has less value because it doesn't produce any income. And then simultaneously work on engaging a broker, or you've already done your due diligence, had a conversation with a representative from one of those QSRs or one of those businesses to enter in the lease, getting the LOI for them to work towards getting the lease. You take something that wasn't producing any income, put a credit tenant in there that's going to pay a decent income, And now you dramatically increase the value of that property, because remember, commercial real estate is valued based on the amount of income produced. So the more income produced, especially now with cap rates compressing on quality properties and quality tenants, the more somebody's willing to pay for that income stream based on that type of tenant. But you also got to pay attention to how you do the lease, because if you structure the lease improperly, it could devalue the investment itself. Because remember, the lease governs everything. It's a marriage between you as the landlord and the tenant, so it governs everything, how everything's going to get handled, who pays for what. I mean, that's the biggest thing, especially if we're talking about parking lot improvements. And then sometimes, depending on these out parcels, there could be agreements with the shopping center where there's an additional fee that's being charged for to maintain the parking lot. So there's a lot of stuff that goes into it, but just to kind of give you a general overall view, this is something that we as a community ourselves can own. Like I said, there's product types or investment opportunities that range, like I said, from $1 million to in that sweet spot, 5 to 7 million, and some up to 10 million. Just depends on what type of property it is and how much and how big is the improvement, the building. But yeah, I think that's something else that we should consider, especially, like I said, paying attention to news. Like I said, you really pay attention to news, really follow, especially you're talking about in retail and the QSR, and find out what new restaurants are looking to expand. And we know that who's actually downsizing, kind of correlating those two together and looking at actually going out when you're driving and seeing, hey, that could be an opportunity. And then also there's people that specialize in doing out parcel developments, which are the preferred developers for a lot of these restaurants, where they look to see if they can get pad sites in these larger shopping centers, or where on these corners or land or wherever, and then put together the deal to get a development fee, develop it, and then sell it to an investor like us, who wants to hold it long term because of the great tenant, cash flows there, very little management, if any, and they send you a check every day, or well, not every day, but every month or monthly, so something to consider, especially as we're winding down. I know people who may, depending on what your investment goals were or are, I know what you're trying to target for the end of the year, or what you're looking to probably invest in, because other things were highly competitive, which net lease deals are competitive as well, because people are looking for alternatives as well. So, it's just not just you, it's not just us. But nonetheless, put it on our radar as something to consider as part of the add to our portfolio. Because again, the goal is to buy income producing commercial properties, so we can fund the things that are most important to us. Obviously, taking care of the family, helping out friends, charities, if that's your thing, providing funds for other ventures, if you want to get into private equity or invest in other businesses, buy businesses, franchises, pay for kids to go to school, retirement, you name it, right? Because I think, like I said, I know just from studying, really only a couple of things that people are invested in, right? So it's either businesses, stocks, and real estate, right? Those are the things that are driving wealth, and things that most people are having in their portfolio in some form or fashion. So staying along those lines, it's not if, and, or but. It's all, we need to be doing all those things. But I think for me, the foundation, because this is what I do on a daily basis, this is what I'll gravitate towards, and be my comfort zone initially, would be commercial real estate. So, as always, like, share, subscribe, leave a comment if there's something in particular you guys want to learn, discuss. I'm always I'm always researching, I'm always doing due diligence, looking at stuff. Since I do this full time, we can definitely have a discussion about it. Definitely give you some input on it, what my thoughts are, because I don't know everything, and there's so much to know. There's no way you're gonna know everything, but working together as a collaborative, as a community, Being able to share this knowledge between each other definitely would help lessen the risk, de-risking any investment that we're trying to get into. Would help us in essentially partner with one another, work together with one another, invest in one another, because we're all going for the common goal, right? So, like I said, like, share, subscribe, leave a comment. I always thank you guys for tuning in. You could be anywhere doing anything, but for some reason you guys decided to come back and watch, send comments, joining the Facebook group, continuing offline, and reaching out. So I definitely appreciate it. It doesn't go unnoticed. We're going to continue this thing because I want to continue to be a platform for it, to have this discussion, and maybe at some point in time we actually start doing stuff in person, right? But with COVID, you just don't know. So again, thank you guys. Education Wednesdays, the Black Community Edition. Let's talk commercial real estate investing, Black people. I don't know what episode this is, but nonetheless, thank you guys again. And until next time, happy investing. Don't forget to like, share, subscribe, or leave a comment. Share with somebody that you know they may be interested. And let's continue on our mission, on our goals. So until next time, happy investing, guys. Peace. Hey guys, so just when I was talking about single tenant net lease, when I was talking about especially like McDonald's, probably can't tell, but there's a lot of cars here. I'm on A, but you can see McDonald's has a lot of people in there. McDonald's spends a lot of time and a lot of money researching the best locations, and then usually because of that, you have competitors that follow as well, especially because they know they spent the money. You'll probably see that Sonic. I'm not a big fan of Sonic because I always look at the real estate first when I'm looking at single tenant net lease deals, because at some point in time the tenant's going to leave or something may happen to the tenant and I need to backfill it. So who, how, and what. And typically with Sonics, man, you can't really. I've seen them be repurposed to another restaurant, but that's mainly a local mom and pop restaurant, and most of the time they just bulldoze, demise it and put something else. There's Cane's. This here used to be a restaurant. I can't think of the name of it. But they were expanding very rapidly, but they had bad management. And now it's eye care. All the locations became eye cares. And then also, what's a great thing is that your Home Depots can become in cases our single tenant list deals as well. So just want to show you a couple of examples. Just to let you know, hey, what they look like, get a feel. Some deals will be bigger than others, but nonetheless, something we should need to be considering to be invested in. All right, guys, happy investing. Education Wednesdays. Let's keep talking commercial real estate investing, Black people. Peace. Just showing you guys, because I'm out and about. Mattress store. Single tenant net lease. Investment opportunity or potential. There was the urgent cares. Those were big. I'm going to tell you resource bank. Remember, say bank was prime. And then look at that. Grocery store. That could be also on a single tenant let's deal. Bank, food, Joe's Crab Shack, Best Buy. Just depending on how it's set up. Vitamin shop, potentially. And then everything else is kind of multi-tenant. But a lot of your big boxes will be parceled out because a lot of times they own their own real estate initially. And then depending on how they're trying to, what situation they're in, for them, their capital is best used to be used in the business as opposed to being a owner of real estate. That's why most big companies don't own their own real estate for that reason, exactly, because their money can be used to get higher returns by investing in the business, helping their business grow. and have multiple locations. It's the Tenant of a commercial real estate. All right. And like I said, I'm out and about, so I'll probably show some more, but it just continues what we were talking about. Single tenant net lease deals. Opportunities to invest in. All right. Peace.
These my dollars make it hurt.